Good morning. Today is the 7th of February and we are standing right outside the Reserve Bank of India tower where in a few hours Sanjay Malhotra, the new RBI governor, will make his maiden monetary policy speech. Remember that he took over as the RBI governor only in December after Shaktikanta Das retired from that position. And now this will be the first monetary policy speech for 2025 and also for Sanjay Malhotra. A few things that he will have to look out for. First and foremost, inflation. While inflation rate has been consistently coming down, core inflation is already below the 4% mark. There is still some worry around the food inflation bit. So that's something that the RBI will have to answer, because so far they've been citing the inflation number as a reason why they have not cut rates. So will Sanjay Malhotra ignore the food inflation number and look at only the core inflation number and maybe give a guidance that this is the right time to cut rates? That's the first one. The second one is on growth. There are concerns around growth. The last policy, which was Shaktikanta Das's last monetary policy announcement, we got to know that the RBI cut down its growth estimates for FY25 from 7.2 to 6.6%. That was a significant drop from where the RBI believed the growth will be for this financial year. Now, if you look at the government's first advanced estimates, that's already at 6.4%. So that is already below what the RBI expects this financial year to look like. Next financial year, that is FY26, the GDP growth number is looking like 6.3 to 6.8%. That's a very wide sort of margin that the government is giving. So we need to watch out for what the RBI believes the growth rate is going to be and how they can support this growth with some kind of a rate cut, whether it's 25 basis points or 50 basis points. We also will need to understand how the RBI is viewing the depth of this cutting cycle, whether it ends with this one policy or whether going ahead the RBI feels the need that more rate cuts are warranted. Now, one thing that will play on the RBI governor's mind is the way the rupee is behaving at this point in time. It's already crossed the 87 mark, and that's a cause for worry. If the rupee continues to weaken, and remember, if there's a rate cut, that weakening will continue. So then going ahead, there will be fears of import and inflation, because India's import bill depends heavily on where the dollar is, where the rupee is against the dollar. At the end of it, if that value goes up, if the rupee continues to weaken, then we will have imported inflation. So these will be worries that the RBI will be playing around with. And the other members of the MPC, of course, will have a role to say what they believe the correct repo rate should be and how the RBI governor actually goes ahead with that.